So, it has been quite an interesting week so far. I mean, what? We got inflation numbers, we got PPI numbers, we got bank earnings the same day of inflation. By the way, guys, so terribly sorry that we could not stream on that day of inflation. It wasn't on Mike, it was on me. All right, it was fully on me. So he could take a drink in solidarity right there, because it was not him, it was absolutely me. But regardless, I still would like to cover it today. A couple of the bank earnings, obviously the big ones, especially now that it has been 2 days since we got bank earnings. How do they actually perform in correspondence to those earnings, right? Not to mention that we also just got Netflix, and well, it's man, they need a stock split. I mean, we are just talking about this before the stream started. They need a stock split badly, because it's getting to the point that I just don't really see how they go on without a stock split. At least it will make it a lot more attractive, even though a stock split doesn't do anything. So we're going to talk about this. We're going to talk about bank earnings. We're going to talk about CPI a little bit and PPI as well. And we're also going to do a discounted free cash flow on Netflix, because we haven't done one on Netflix with the new discounted free cash flow, which, by the way, it is available for all of you guys to have as well. And with me to talk about all of this today, it is, of course, that's not the right template. It is, of course, oh my goodness, I'm so bad at this. It is, of course, Mike. There we go. Let me unmute you.
So
You may proceed.
Yes. So with Netflix, we've been calling for this stock split, and I'm just sitting here on the earnings, and we'll get into it, right? When are we getting this damn stock split? I'm like, you're just biting yourself in biting the bullet, because I'm like, I don't want to pay $12.74 for your stock. I want to pay $127.
Let's face it. If they do a stock split, nothing really changes. It's all for optics. It really is all for optics, especially.
Yes and no.
And by the way, no, it actually is. And here's the reason why. Very quickly, not to get off on a tangent. This is still the intro. But here's the reason why. We got fractional shares. Now, most brokers offer fractional shares.
Yes, I agree with that.
There's no point to a stock split.
Yes, but it is also about the psychology, right? By owning one share of Netflix versus owning partial shares, it plays a little bit into the psychology of humans. So it gets you, like, when someone tells you, even though fractional shares, right? So like, take it to someone that doesn't know anything about the stock market. Fractional shares is like level 2, level 3. Whereas, like, if you just tell them that it's like it's $100,
yeah,
it's very easy to understand. There, like in the book Atomic Habits, right? They talk about like building habits and the barrier to entry, and essentially, like, fractional shares is here. Whereas telling me it's $127 and I have $200 to invest, it's like here. So
yeah.
it brings a larger pool of retail into the mix. Having said that, that's the only thing it does, right? It only plays with the human psychology. It doesn't change the fundamentals of the company. It doesn't change the actual, like,
Market
trajectory
cap,
of the company.
Yep.
Yeah, like none of that, right? So getting that all out of the way. But it's very, very interesting to see what banks did, what Netflix did, and we called it on the Week in Deep Dive. And if you guys missed it, again, subscribe to the channel so you don't miss more of them like that. But we were saying that Netflix is the one that we're actually worried about, because it ran up like crazy. We also said it for JP Morgan as well, where it ran up like crazy into earnings. And then everyone's wondering, like, why did JP Morgan fall on earnings, even though it had good earnings? Because you didn't beat the crazy expectations.
Right. And then you run up to it as well. So we're going to talk about this. But before we do that, guys, of course, make sure to subscribe, comment. Really does help with the algorithm on YouTube as well as Rumble. Make sure to follow us on X at Fatal Investing. And of course, by the way, Fatal Investing is the name of the channel. It's not my name. Make sure to follow us on X at Fatal Investing. And of course, if you're joining us on the Discord, the link to that is in the description below. If you guys would like to talk to us, that is the best place to do it. Now, before we actually get started with the news, let's do a quick prayer, because at the end of the day, that's the only thing that really does matter here. So, Heavenly Father, my Lord Jesus Christ and Holy Spirit, thank you so much for everything that you have done for all of us. Really, really do appreciate everything. And honestly, there's a lot of stuff going on right now with the U.S. government and Trump and all that stuff. At the end of the day, You're the one that put him into power. I believe it is Daniel 2:12 says you remove kings, or you set up kings and you remove kings. So you're the one that put Trump in power, and for some reason you decided to move his head on that day for him to become president. All the stuff that's happening, I don't know, but you're the one that's in control at the end of the day. And when it comes to the stock market, when it comes to just the overall economy, you're in control of that as well, because everything does belong to you. So no matter what happens, we can rest in peace because you're in charge. In your precious name I pray. Amen. All right, guys. So let's get started with the news. In fact, let's start with this. S&P 500 NASDAQ notch record closes as retail sales on earnings fuel rally. We got Wall Street close at trading higher. Are we at all-time highs already, by the way? Just a question here. Oh, I forgot to unmute you. Go. Sorry. Go.
Sorry, for which particular one?
S&P and NASDAQ, are we at record high or all-time high already, or no?
Oh, I believe we broke, yes.
Oh, we
yes,
broke
we broke
all-time
the
high.
all-time highs today.
All right. All right. So, Wall Street closed out trading higher on Thursday, with both NASDAQ and S&P 500 surging to fresh record highs. Fair enough. As investors weighed new data on retail sales and jobless claims, which we'll also take a look at that. The benchmark S&P 500 ended on top by 0.5%, and the blue chip Dow had climbed by 0.5% at the same time. Tech-focused NASDAQ was able to advance by 0.7 on the session. Among the 11 sectors, 9 ended in the green. The financials and infotechs at the top of the leaderboard. Going the other way was healthcare, as segment was weakest performer in the day. And on top of that, we also got U.S. Treasury yields observed limited moves as a shorter end U.S. 2-year yield gained 2 basis points to 3.92%, and the longer 10-year Treasury had risen 1 basis point to 4.46%. So we just had a massive rally overall when it comes to the stock market again. Wow. Now, I do believe yesterday we ended up in the green as well, if I'm not mistaken. And are these futures correct?
What? They're no.
Okay, that's
No,
not
that's
correct.
still, yeah, that's not. Anyway, but I do want to talk about what old man Toby said about the news that just came out probably an hour ago about Trump admin changing the rules about what you can invest in a 401k.
Go on.
Where they're gonna be opening it up to crypto and gold. Like direct, right? Not through what previously was channels where you had to go through like an ETF or through like something that's an actual holding company of it, right? You can directly invest in the commodity now.
Okay.
So get ready for risk on mentality going straight through the roof.
That's what I have to say to that. Is just a simple okay. I mean, you guys know how I feel about gold and crypto, especially when putting it into your 401k as like a not tangible thing, right? It's like the way that I see it. If you're going to invest in gold, buy it physically. Have it physically in your hands. If you're going to invest in Bitcoin, buy, let me see if I can actually find it. Buy the cold. Let's see if I can actually find
cold storage.
Yeah, buy the cold storage wallet, right? Buy the cold storage wallet and send it to your cold storage wallet. That's it. Yeah. That really is it. Like all this stuff about like, oh, you could buy this ETF that, or you could track now the commodity. You gotta have it physical. That's not how that works. At least when it comes to that. Everything else, it's like, all right, whatever. But so yeah. But
I do want to sidetrack for a second about talking about oil for a second, right? Sure. Because it's done a whole lot of but nothing recently. And before we get into Netflix earnings, I do want to touch base on the CPI report, right? Like a quick
I have it.
I told you so moment, right? And you actually won the bet of what's the oil prices and energy we're going to come in at. So that was very, very interesting.
I do have it pulled up. Pulled up.
So here's the too long didn't read version for all those who want to know about CPI. Take a look at PPI. That's the too long didn't read version, because CPI, as we love to call it, I'm just like, when you guys fudged with these numbers, there's no way it came in.
Let's pull it up. So We got CPI a few days ago, 2 days ago now, as if I'm recording, as if we're live streaming this. It is the 17th. This thing came out on the 15th. And, okay, so we were right in the sense that energy was going to come in negative. I was not expecting it to be that close. Now, what really surprised me was food, because food came in at 3%. I was expecting not 3%. I was expecting like
Yeah.
2.8 or 2.7, something along those lines. And in fact, I do have the ones from last month.
Yeah.
And
And while you pull it up, I want to answer old man Toby's question.
go ahead.
He asked, you guys explain to me, maybe I don't understand how 401k works. Basically, it's a retirement account that's created through your employer.
Well,
And
not necessarily. You could do it as well by
or
yourself.
sorry,
But normally
traditionally it's through
yeah.
your employer.
Yes.
But to make a long story short, it's a pre-tax, meaning that the money is put in is not taxed, right? It's taken out before your paycheck, and you can contribute up to 20,000 per year from employee contributions. That's if you're filing single. It's different if you're married or joint and all that other hula blah. But there's limited things depending on the 401k of what you can invest in. Sometimes employers restrict you to only certain programs. Others allow you to basically invest in whatever. For example, like in my 401k, I can invest in whatever. There's like the funds you can invest in, and then there's whatever you want. So I can invest directly into the stock market, individual stocks, and pick them. Uh, uh, and then Lax saying, so can I ask how many people have heard of school per capita tax? But it's not really that much. But anyway, going back to 401k before I go on a sidetrack. Essentially, your employer can offer a match. That's sometimes like an incentive package for it. And subsequently, it's one of those things like, if you have a 401k, probably put money in up to the match. No more is my philosophy on it, because everyone argues about like, oh, like you're going to pay more taxes in the future. That's why we don't like 401ks on this channel. But you're never going to pay 100% tax of free money that the employer is giving you. So it's like tomato at that point. So again, like that's what I give advice to everyone that asks me about 401k. I'm like, okay, if they match with 3%, and that's it. The rest goes into the Roth afterwards, and it goes into the regular brokerage, right? Like that's how I structure it. So for me, 3%, and also 3% is not a lot, guys. So right, like if your employer matches up to 3%, that's like 50, 60, $100 on the paycheck. It's not even remotely anywhere close to what you're going to put in the Roth and everything. But that's the long-winded version of the damn 401k. It is basically, yeah, okay, tell them it's a Ponzi scheme and that you hate it. So let's go.
It's not a Ponzi scheme and I don't hate it. And you forgot once, but well, you kind of said it. But basically, just to add on to that, it is tax deferred, meaning that you don't pay taxes today, you pay taxes in the future when you take it out. Now, I personally do not have a 401k. I don't like 401ks. I don't think that if you are, at least for me personally, my own opinion, again, not financial advice, nothing on this channel is, but for me, I personally do not consider a 401k a good investment. It doesn't make any sense, because think about it. What is the incentive? Think about this. What is the incentive? Why is your employer giving you free money? That right there is a major red flag. Don't you think? Why would they do
because
that?
they get to write it off of
because they get to write it off of their taxes. Boom. And on top of that, why am I going to put something? You said it yourself. Why am I going to put in money into something that I'm just going to have to pay taxes later, when I'm going to have to pay more taxes in the future? And just regular inflate, like, it doesn't make any sense. And then just to add a third layer to this, you kind of said it, but to me it's a big deal. I do not want to be limited to my employer's whims, as to what I can and can't invest in. For example, like right now, if you're at your job, you cannot liquidate your 401k. You cannot liquidate the 401k from the job that you're currently at.
Yeah. The only reason that I have mine, just to give context to it of like what we're preaching. Number one, I can invest in whatever I want. Number two, they put a contribution in that's percentage of our salary at the end of the year, even though you don't contribute at all, right? So that's a benefit I have.
Yeah, and
I have
as well. And I always
Yeah.
liquidate it every single time at the end of the year.
Yeah.
I always take it.
So basically, if that's the case, then I say it's worth it. If majority of 401ks, right, you can't invest in what you want, they don't contribute as much, right? That's why I don't like it. And to answer your question about, and you're not taking anything over, a pension is like 401k without any of the good stuff and literally all the bad. Like you don't control where it's invested, you don't control how it's distributed, you don't like take the money and the equivalent of put it in a box, throw it in the woods, and pray to God that it's there in 50 years.
Now, that being said, if you are within, if you have, well, if you have throughout your whole entire life, you're now at 50 years old, even to some extent 40 years old, 40, 50, 60 years old, you've put in more than 10 years into a 401k, don't just stop doing it, right? Like that's not what we mean. We're taking this from a perspective of some people in their 20s, right? We don't people in their 20s with investments, right? At least for me, and I'm only going to speak for myself. You guys see my portfolio twice a month. In fact, I just released a video today showing you guys the portfolio performance for the month of July so far. Majority of my money is already invested, right? People, the 401k is there for people who aren't investing in anything, right? If you're already investing, I don't see the point in it. And when it comes to retirement, a Roth IRA, even a Roth 401k is better. A Roth IRA is significantly better. Significantly better. Yes, you are capped at $6,000 per year, but all of those dividends from real estate companies, all the dividends from non-qualified dividend-paying ETFs like your JEPQ, like your JEPI, QQI, SPY that have 14, 15% dividend yield that get taxed at a normal income rate. All of those dividends get taxed at 0.
Yeah.
So,
and it's also like if you're also asking about like if you force rank this, right? And the comment about like people like it's capped. I'm like, how many Americans actually save $7,000 per year on a like a percentage basis? And it's tiny, right? So like if you're not going to reach the Roth threshold by savings per year, don't touch 401k with a 200-foot pole. Don't like your priority should be like Roth IRA, max it out. If you know you can max it out and then contribute to your work, yeah, okay, that's for you to decide, right? I can only give you the math of what's going to happen and how you control the money, and you know best what you want to do with your money. Sometimes the argument could be that you put in a regular brokerage and you control it and do whatever you want. But pensions, I personally don't like, and pensions are more of like an old guard type thing because a lot of companies don't offer them.
Ancient.
Yeah, ancient. So like a lot of companies don't offer them anymore. Really, just once the 401k came about, that's traditionally what companies went to. So.
And right now you have the new Trump thing that any baby born between January 2025 to 2028 gets a Trump a Trump account that gets put into it's nuts. But hopefully that answers your question. Going back to CPI.
Netflix. Oh yeah, so no, CPI. We're on tangents. We're on tangents today.
It's okay. We haven't streamed in a while. It's fine. But let's go back to CPI because this is what I'm about to show you guys. It is 2 images from the previous CPI from May 2025. So the first one that you're going to see is food, and actually food, I thought it was a lot worse. It actually came in rather the same. Oh, the wrong one. It's this one. There we go. So you guys can see right there. This is for May of 2025. I took a snapshot of it. Food actually came in at 2.9. And right now, currently, food is at what? 3.0. So there was very little change. Again, what's definitely driving inflation right now, it is energy. Because energy in May of 2025 came in at minus 3.5. And as of today, it is at, minus 0.8. So we can definitely see that energy is the thing that's bringing down inflation, which is, ironically enough, it's the main thing that Trump wants to bring down. Food, very, very difficult to bring down. Very, very, very difficult. Energy, this thing swings like a madman. Like, it's just absolutely nuts. So
It literally it is, and it's funny how like the next month on energy was again still higher, like heading upward. So we're gonna on the next CPI report, we're actually gonna return back to the original negative 3.5% on energy because oil for this entire month is significantly lower than a year ago. So expect to see a good CPI report next. And we also got that with the initial PPI release. Again, PPI front runs CPI, CPI front runs PCE. So if we're already seeing the PPI numbers coming in, they're really, really good. And everyone, it goes back to the question of Fed rate cuts? Question mark.
right, right. And NC native. That's actually incorrect. So you said you can also pull out your original Roth contributions without penalty since you've already paid taxes on it and use it for emergencies. I don't know if there's a provision for emergencies, but no, unless you're 59 and a half, you cannot take out anything from a Roth IRA. Nothing.
And you
No?
can.
You can?
You can. Yes. Whatever you contribute, you can take out. You cannot, with no penalty and no taxation, you
Okay.
cannot take any gains.
You can't take the gains. Okay.
Yeah. So for example, if I put 20K into over, let's say for a year, 7,500. If I can take 7,500 out. Whatever gains I made on that 7,500, I cannot.
Okay. How can you separate the two though? Because you kind of can't unless you just take away the principal.
The thing is like, so let's say you put in 7,000. Let's just use 5,000 as a round number.
5,000. It goes up 2,000, but
or let's say it goes to 10.
Whatever.
Let's say it goes to 10. So I can take out
5,000.
Yes. Okay. Then what happens is if you take out more, then you're issued a form, which basically with all the penalties associated with.
Okay.
They send it to the IRS.
I thought it was okay.
Yeah, a lot of people say that. I do believe they changed it a couple years ago because that was the way I believe it was before.
That's when I started mine. That's how it was. You were not supposed to take out anything until you were 59 and a half without any penalties. Yeah. So,
which is really good because then like a lot of people can take advantage of a Roth while having an emergency fund because you can put it into like stable companies that don't necessarily have high capital appreciation or craziness like movement wise. And then that's your emergency fund that is not being eaten away with inflation.
Correct. I really just want to get through this and then we'll re-chat again because you guys are talkative. 14 of you mad lads watching right now on Rumble and not that many people watching on YouTube, surprisingly enough.
Yeah, they're all busy watching the videos.
Fair enough. Man, that's been skyrocketing. But let's take a look at this. So we got, when it comes to food, I'm just going to run through this itemized really quickly. Food coming in at 3.0. Food at home, 2.4. Cereals, 0.9. Meats, poultry, fish, and eggs, up 5. That's a lot. Wow. 5.6. I really wish I could like click a button and see this itemized even more. I really want to see which one was the highest. I'm pretty sure you can, but I'm not going to figure that out right now. Dairy-related products up 0.9. Fruits and vegetables up 0.7. Non-alcoholic beverages 4.4. Other food from home 1.3. Food away from home 3.8. Full-service meals and snacks 4.0. Limited service meals and snacks 3.5. Everything was up by like a lot, by almost 1% or more. That is nuts. When it comes to energy, we got energy commodities down 7.9. That's huge. Fuel oil down 4.7. Wow, that's why? Do you see it?
Yeah, the natural gas.
So if it wasn't for natural gas, this actually would have been a much lower. It actually had nothing to do with crude. Well, I guess it does, but it had actually nothing to do with crude oil.
No, it has nothing to do with tariffs. Show me where the bloody tariffs are, because if this number over here, negative 3.8, that's what gas is, right? That was with
gasoline, 8.3.
Yeah. 8.3. Yeah. So let me just quick side point right here. Crude touched the previous year's number for 2 days, and we saw stupid price gouging during that time. Because we did with all the gas stations. It takes 2 weeks for the gas to go back down, while the oil prices are already back down. If that's negative 8.3, what do you think the next one's going to be? Negative 16, negative 20. And then that's going to be a boat anchor because this natural gas stuff, because it has seasonality and natural
It
stupid
does.
crap. I'm almost tempted to go look up natural gas now just to see like the
That,
year, like the monthly view from previous, just to
yeah.
see like
The issue though,
what it,
with the issue though with saying that natural gas is seasonal, I would actually argue that this is the off season.
yeah.
So if it's 14% on the off season when it's winter and houses use natural gas
See, that
for
actually doesn't
heating,
make sense.
huh?
See, this doesn't actually make sense. This report doesn't make sense. If you look at UNG prices,
Do you want me to pull you up?
UNG in the month of yeah, so we can actually do this. Um, so I'm going to snap a line to the previous year's range, and then we're gonna go back to like the weekly view, so it just makes it easier for everyone. This is
Exactly,
what
NC. Exactly.
this is June. We literally did not have a positive number. So I understand that sometimes like transition and transportation cost and stuff like that. Okay, I give you that. But you're making the assumption that the transition prices are 2-3 months behind. That doesn't make sense in commodities. And that majority of the transactions occurred here, which was outside the realm of the previous transactions. And really, when you zoom out, it's just been going sideways. So again, the Fed loves to cook the books, and the CPI report loves to be cooked in every way, shape, or form, right? Whatever narrative it wants to suit, because proof's in the pudding. Natural gas was not more expensive during that time. So where is this 14%, right? Premium coming in?
Could it be 14%? Well, how about 14% from a year ago?
It didn't even transact.
Are you sure?
Yeah, because this is
June.
June.
So June of
June
2024.
started.
June of 2024.
Yeah, the blue lines. The blue lines are the previous transacted price. This is where we transacted in all June and now. We spent one day above the 1 week above
I'm
the
not sure.
price.
I'm not sure. All I know is that if we were to take a look at that one more time, yeah, energy
Now,
services,
electricity, I believe.
energy services up 7.5, electricity up 5.8, bro.
Yeah,
Electricity
I
just
believe
doesn't.
that. I
Bro, I
believe that.
believe it, bro. I'm about to hit 200. I'm about to hit 200
I
very
already
soon.
paid the 200. I already paid the $200 bill, so
Hey man, I gotta
join the
keep.
party.
I got listen. My wife is at home. I have a baby at home. I have a cat at
Yeah,
home. Guess what? The AC has to stay on the whole entire
yeah.
time.
I have I have a 4,000 square foot house, so it equals out.
It does equal
But
out kind of.
yeah,
And the plus your parents also stay at home too. All right.
yeah.
And then natural gas pipe 14.2. This became the what's the thing called again? Car insurance. There you go. The car insurance of the energy sector or of the energy category. Then we got items less food and energy, the core coming in at 2.9. Commodities less food and energy commodities up 0.7. Apparel down 0.5. New vehicles up 0.2. Used cars and trucks up 2.8. Medical care commodities up 0.2. Alcoholic beverages up 1.4. Tobacco and smoking products 6.3. And now here comes the big boys. The thing that's going to destroy Jerome Powell. Shelter coming in at 3.8. Rent to primary residence 3.8. And owner's equivalent rents of 4.2. This thing has not seen sub
Threes ever.
low 3.0s ever since like I think
But yeah, but hold on,
2020.
hold on. But we are seeing a tariff inflation coming to us. It will be very long. It will be tariff inflation. I hate Jerome Powell.
I
I
mean, don't
like
we
at this
all?
point. At this point, I'm just like, for the love of you know what, just see
All right, Toby, have a good night, man. Thank you so much for stopping by.
you,
Thank you so
Toby.
much for stopping by. All right. Medical care services up 3.4, physician services 3.0, hospital services 4.2, transportation services 3.4, motor vehicle and maintenance repairs 5.2. Oh boy, I got an inspection on Saturday. And then motor vehicle insurance 6.1. Wow, it flipped. It literally flipped.
I call BS on the next one.
And airline why, where are you going?
Every year, Jackson Hole. You
I
should know
guess
this by
fine, but
you should
you
know
know,
this by now.
yes,
And
but
Europe in
you
May.
go in
Like you should know.
February though. You're going like January. So
Yeah, January. Yeah, but I buy the tickets now, meaning I want this thing when this thing is like year over year. I
do
call
you
bull
really buy the
crap.
tickets now? Wow. All right.
Yeah, yeah. We always plan it so that we don't have to worry about it when we're up closer.
So all of that resulted, guys, in the CPI coming in a little bit higher than what we were expecting. And did I mess this up? Oh, it was 2 days ago. My bad. My bad. It was
Yeah, but we want to talk about PPI also, right? So
we
PPI
are.
came in really nicely also.
Wait, I'm confused. I just clicked what?
Hit this
I'm on the
week.
apply.
Just
Sorry.
hit,
Sorry.
yeah, but just hit this
I
week.
forgot to hit apply. No, I know, but I want to go through this first. So, when we looked at this for the first time, we said there's no way it's going to hit 2.6.
Yeah, we were all calling bull crap on
Yeah, we
this, and
were.
I'm like,
We were.
I'm willing, like, oh, I ate turd that day.
Yeah, we were. Though to be fair, core CPI did come in lower than expected. It was they were expecting.
Yeah, because you can't play with the fudge factor as much.
Yeah, yeah. Though it did come in a little bit higher than the previous one in general, but yeah, we were expecting normal CPI to be like what 2.5, right?
Yeah.
At best, coming in with expectations. So we're wrong on that
I
one.
reserve the right for 2.5 next month.
Fair enough. Fair enough. So let's take a look at PPI, shall we? Now, I don't look at PPI. I don't track PPI as well as I do CPI. But
Yeah.
over here, we got, this is the producer price index. This is basically what businesses, the cost of businesses, basically. So like the cost of businesses to buy stuff. This is what you will see with inflation. Not inflation, tariffs. This is what you will see with tariffs. Yes.
Should be.
Yes. This is where the tariffs should be. And by the way, shout out to the 15 of you mad lads watching right now. I really, really do appreciate it. And on Rumble. And shout out to the 3 of you watching right now on YouTube. Really do appreciate it as well. But guys, take a look at this. Take a look at this. Again, this is for June. Liberation Day happened on April 2nd. We had the entirety of April, the entirety of May, and
So did you hear the Fed's latest forecast?
go on.
Tariffs will hit next June.
Next June, a year from now.
Hey,
Can
I quote a very, 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 very wise Treasury Secretary?
Go on.
I want to quote it exactly, so I'm looking for the exact post.
It's
U.S.
Bassett.
Treasury Secretary
Bassett.
Bassett
Yeah.
on June 30th, right? You know, coincidental, right? Nothing more transitory for inflation than tariffs.
So
No saner words have been said
we just
to
had
slap the Fed in the face.
2 months of tariffs. On and off, sure. I fully understand that. But we've had deals happen where you would argue that we should see a lot more increase. And yet, what did we see? Hang on. And then what did we see? When it comes to the PPI year over year, guys, last month was, first of all, it was revised from 2.6 up to 2.7. They were expecting 2.5. It came in at 2.3. There's no tariffs here. There's literally no tariffs here. And then when it comes to the core, 3.2, revised from 3.0. So that was actually a big jump on the revision. They were expecting 2.7, came in at 2.6. Now, expect a revision to the upside in August for July. Expect that. But
maybe, right? You know,
maybe.
Don't throw the baby out with the bathwater. You know, again, Bassett said it literally in this month's report, right? Like he said it in June before this report came out, that nothing more transitory for inflation than tariffs. And we're seeing that right now. We're seeing the Fed transitory narrative of when tariffs are going to hit, right? It was June, it was July, it was August, it was September, now it's October, then it's going to be December, it's January, then February, then March. It's like, how about never?
I don't necessarily say never, but this is coming from the guy that said inflation is transitory 4 years ago.
Yeah.
And it took it took 9%, 9.2% for him to actually start doing something.
Yeah, I'll put my money on the guy that's managed to make the treasury profitable.
Yeah.
Like
cash flow positive.
I'm betting on that
ridiculous.
So, did you see the latest news about the revenue? It hit a new all-time tariff revenue high.
And by the way,
87 billion.
And by the way, not to sidetrack a little bit here because I do want to get into these earnings from the banks. I do believe that the Doge cuts are about to get
Yeah, they
I'm about
actually
to get signed.
approve. They're not big, right? Again, to preface, not the trillions that were promised, but you
I'll
got
take
to
a
start somewhere.
I'll take a couple hundred billions. I'll take a
Yeah, it's like
couple
300
hundred.
billion.
I'll take
Yeah,
it.
it got.
It's better than nothing.
Hey, everyone said the tariffs are going to crash the economy, the Doge cuts are going to crash the economy. I'm like, I'll see you at 200, Nvidia. Thanks.
Basically, dude. Could you
Jim
imagine?
Sung.
I sold my AVGO. Did you just hit the camera?
Yes, accidentally. I hit the table and then hit the camera.
It's okay. I sold my AVGO for a profit of 20,000. If I would have held it till now, I would have been up like 40,000.
But priorities.
No, obviously, I had a plan. I'm not having FOMO about it, but AVGO went down to 180, and people were
And
freaking
also,
out.
Nvidia. I have a question for the audience. 5 trillion before or after earnings?
That's right. Earnings is coming soon.
I'm at the way it's running now and the amount of time that is present to earnings. I'm just like, I'm questioning if you're not going to reach it, or like on earnings day, right? Like you reach the 5 trillion threshold on earnings day.
Apple's basically
And then,
done, right?
no, Apple, again, everyone's hating on like the whole Tesla, me not including Tesla in the video or talking about Apple and saying like Magnificent Seven. I'm like, there's a reason I didn't say Magnificent Seven because Apple's in that. Even I question Amazon. I own Amazon, but Amazon wasn't in the top four because of some issues that are going on, right? And then I look at Apple and I'm like, you've literally, as the market has completely recovered, done nothing since April. And you wonder why everyone's rotating out of you, and then Warren Buffett having the last laugh, like usual with everything. Wouldn't be surprised to see him in Berkshire Hathaway earnings basically be like, "Yeah, I sold the rest." Like that would not surprise me in any way, shape, or form. And speaking of Berk, when is their earnings? August 4th.
It's
So
usually
again,
like a weird day. It's usually like a Sunday or something. It's very, very strange.
yeah, which is weird. But then again, it's Berk,
Warren
right?
Buffett.
Like,
It's Warren Buffett. It's just like, all right, dude. You
yeah,
want to
like,
have it. You want to make up a day and like that doesn't exist, and you want to put it on that day. You go ahead. I think you have the right to do it at that point.
yeah, he wants to be special.
He does.
He wants to be that day is special for him because he's like, here's your 2-paragraph earnings report.
I mean, I showed you the for the first time ever, like a few years ago, the Berkshire Hathaway
His
website.
earnings report.
No,
literally
website.
where it's like
it's just black and white.
Like,
It's black and white. There's no animations. There's just this text and the logo of Berkshire Hathaway. That's it.
But if you look at it, why is Berkshire Hathaway valued at over $1 trillion?
Yeah.
It's like you see like everyone's selling Tesla, everyone's selling Apple, buying Meta, AMD, Palantir, Nvidia, Amazon, even Coinbase, right? AVGO, like everyone is just piling in to that. So I just find it interesting. Like Berk still $1 trillion market cap. Not a lot of companies can say like JP Morgan and Berk are like duking it out, right? So it's gonna be very interesting after the earnings for them.
So let's read some chat before we actually go on to the bank earnings really quickly. My goodness. So let's see. I hear the Earth's poles are gonna flip, and worldwide would be out of work for a few years. That's actually pretty funny. But listen to some crazy stuff. Yes, you do, especially with those jokes. B Money, LOL, I love it. NC, yeah, NC always with the jokes. Black and sticky, but it ain't sticky icky. Put it in the roads so the asphalt does the tricky. Sure, okay, that's my tariff. Good. No, that's my tariff. There you go.
My God, NC Native's on a tear today.
He's always on a tear, Joe. He's on every single chat, every single time. He's always like that, and I love it. We people are buying 3,000. People are buying the 3,000 Apple Vision Pro. Yes, and even with that, their fundamentals are cockapoo. Like if you take a look at Apple's fundamentals, they are not good. Not good.
Let's just make it simpler. They refuse to embrace AI in where the world is revolving around AI.
They refuse to embrace AI when they had the perfect marketing for it. You know what it is?
Siri AI?
No,
No, okay, I
Apple
don't.
Intelligence, AI, Apple
Oh, oh
Intelligence.
wow.
It's perfect. It was handed to them like on a
J-
silver plate, and then
Jensung probably just watching it, being like, "Thank God they're damn stupid."
they had Siri already, which is kind of like a pseudo, not really, it's like a fake AI. But then on top of that, they were planning to come out with Apple Intelligence and then calling it AI, and it worked because it's
Hey, I have
Apple
a better
Intelligence. I'm
idea.
just like,
I
what's
I have a better idea.
what?
Apple buy OpenAI.
Mm,
You
with
you have the
Microsoft, I
money.
doubt it. I doubt it. Yeah,
No, then
I don't think
integrate it. Then
Microsoft. I do not think Microsoft will
well,
take it
OpenAI
kindly
is
to that.
trying to.
You will
Yeah,
have a
but
bidding war. You will have a bidding war at that point.
yeah, but okay, but do something, please. Just for the love of God, do something else.
It's true.
And like you said, they had the perfect marketing scheme. Like it was just perfect,
It
right?
was
Like you threw away your $4 trillion market cap. Thank you, Nvidia, for beating them to it because you deserve it. And then it's like you're gonna lose 3 trillion soon. You're gonna go into the ashes of history because you refuse to innovate. Companies that are not growing are dying.
yeah, and Apple could have had it. Here's something also that I really just want to talk. Not now, but I really just want to have like a video, like a standalone video, just talking about AI, because it's getting to the point where I'm like, what else can they provide for it before they start copying each other? You get what I mean?
Oh, like everything is a remix type thing,
No,
where it's
no,
like,
and I don't want to get into it right now. Again, this actually be a really good for like a standalone video for like a Saturday or something. But what I mean is, um, I would actually prefer not to have an overall AI, but to have um uh decentralized AI. What I mean is Claude only for coding, ChatGPT only for images, Gemini only for video, Grok only for, I don't know, just
social media
general social
posts.
media stuff. Right. What else can you add? Seriously, what else can be added that can make one AI different from another? Do you get me?
Yeah. It's more about like the intelligence of the AI, right? Where
Sure,
how
but
like
they're
how it can logic stuff out and
sure, but notice how they're kind of moving themselves
merging,
naturally, huh?
like kind of they're all merging into one
No,
type.
no, the opposite. They're kind of
Oh,
merging into their own separate niche.
yeah.
Like, you get me? Like, Claude is specifically for coding, right?
Mhm.
Claude specifically for coding. ChatGPT is strictly images. Honestly, ChatGPT has amazing images, and I think Sora now with ChatGPT is really good video. But Gemini is really, really good too, and Midjourneys as well with video. So it's almost like you have these pockets of niches that each individual AI will go into. My concern is, I guess it's not really a concern, but my thing is, how long till all niches are covered and then there's nothing else? That's, again, it's a topic for a video that I
Yeah.
really would like to talk about. But all right, let's see. Oh my goodness. Okay. If you give Bible lessons on Amazon, you consider Prime Minister. Haha. I actually use Berkshire Hathaway. I actually use Berkshire products. They have errors, omissions, insurance, and that I partake in. Though fatal can we also talk about how Twitter's waifu AI companion is gonna have people paying, bro? You on both ends. That's
Oh
horrifying.
God.
That's horrifying. I don't know if you saw that, but that's horrifying. I
What?
will pay way more than that if they ask for nerdy, for if they talk nerdy to me. Wow. I have Apple Intelligence on my phone. I love it more than ChatGPT, Grok. All right, Lax. All right. It's not marketed well. It's not marketed well. It just isn't. Siri must be the smartest. Whenever I put my phone on airplane mode, Siri says, I am Sarah. I am Sari, and don't call me Shirley." I don't understand the joke, but sure. I will. Sure. All right, guys. Let's go into some earnings. So, because we did have a lot of earnings, especially right here on Tuesday. We had a lot of earnings right here on Tuesday, and today also we had earnings with Netflix. However, I would like to take a look at earnings when it comes to JP Morgan first. So let's take a look at the bank earnings. I'm not going to go too into detail about this, but I do want to see as to how well they did or didn't do, and then how after 2 days how the stock has performed. JP Morgan Chase non-GAAP EPS of $4.96 beats by 48 cents, revenue of $45.7 billion, beats by a whopping $1.66 billion. I got something in my eye. Okay,
All
so
right.
this revenue, a massive beat by 1.66 billion. My concern is this: revenue year over year is still down 9%.
Yeah.
So,
Because loan volume, right? They cited it again. A lot of the banks cited like you can only keep interest rates this high and then expect the banks to they can short term perform, but the consumer is strapped for cash. But then also like if you look at all the bank earnings, and this ties into CPI discussion, and I kind of mentioned in the video. So you're telling me on one hand tariffs are going to increase prices, but yet we know on this channel that something is only worth what someone is willing to pay.
right,
And on the other hand, you're telling me the consumer is strapped for cash and has no money.
right.
So how can the
Pick one.
same consumer pay for this to justify the price and
Oh,
therefore prices increase?
that's very easy actually. It's called debt.
Yeah, I didn't think of that.
Yeah,
Crap.
it's literally just called debt. You
Yeah, but then but
all
hold on,
these
hold on,
all
hold on.
these stuff,
Well,
all of these things, all of
the
these
banks
things.
would then make more money.
Right, all of these things of the consumer is strong. The consumer is not strong. The consumer's in debt. The consumer's in massive debt. But also look at this: AUM of $4.3 trillion, up 18%. You know what AUM is?
Nope.
Assets under management.
Oh, they're buying stuff.
This is their assets. This is basically like
How many stocks they own?
no,
Or bonds they hold too?
bonds, stock, mortgages, that kind of stuff, right? MBSs, that kind of stuff. So that's basically what AUM is, 4.3 trillion, and it is 18% up year over year. Now, how did the stock perform these past 2 days? Well, we're about to hit 300.
Yeah, it did drop on earnings.
It did drop on earnings, but it wasn't anything major. It really wasn't. I mean, what? It stayed roughly the same. Actually, stayed roughly the same.
It actually
really
dropped before earnings.
Okay, I'm not gonna be able to see
So
it.
like yeah, so it went up, dropped before earnings, kind of stayed flat for if you go to the 1 month, you'll see it. But you see like this little drop and then it's petered sideways this entire time.
Earnings was here. Earnings was the
Yeah.
15, so this
Yeah,
was
I'm
it.
saying before. I'm saying
Oh,
the
okay,
before
right
the
here.
July 7th.
I see what you mean before
Yeah.
earnings. So, yeah, no, I mean we basically just been flat since July 10th, technically. So, yeah, it's actually been doing very, very good. Now, I do believe that they also announced a dividend, if I'm not mistaken. I'm gonna try to see if I can find it real quick. If I can't, then I
As you do that,
can't. What was
I'll
that?
be right back.
All right. Yeah, so they did. I'm fairly certain that they did announce a dividend, but I'm not gonna. If I can't find it right now, real quick, I'm just not gonna bother. But they did announce a dividend, and we can see that it is now $1.40 per share, $5.60, and the current yield is around 2%. All right. So that was JP Morgan. Nice, up 1.43%. Now, when it comes to the next one, we got Wells Fargo. Wells Fargo. A non-GAAP EPS of $1.54 beats by 14 cents, revenue of $20.82 billion, in line. Now, even though this was in line, the revenue year over year, it is 0.6 in the positive, which is fairly surprising because Wells Fargo is usually the crap one, and right now it's not doing so bad. Now, how did the stock perform? Today, about flat, only down 0.25%. And during earnings, wow, that's a massive drop. Never mind. This thing had a massive drop at earnings, as you guys could see right there, going from $83.43 down to a low of $77.88. So they really haven't recovered, right? That earnings just knocked them down the peg, and they have not recovered. Even as of today, they haven't recovered. So not really surprising though. Wells Fargo is usually a pretty bad one. Usually it's the worst out of the 4 major banks, right? It really is the worst out of the 4 major banks. And lastly, we got Bank of America. I'm gonna skip on Citi because It is what it is,
All
right?
right.
When it comes to Citi. But I am going to go now to Bank of America. Bank of America, GAAP EPS of 89 cents, beats by 3 cents, revenue of 26.46 billion, misses by 270 million. Funny, because the other one, in line, what right? Wells Fargo was in line. The revenue year over year was in the positive, just like this one. It's up 4.2%. Still a miss, though, overall, when it comes to the analyst estimates. And Bank of America today gained around 2%, $47.02. So Bank of America, I do not believe that they had a crash during earnings. Yeah, okay, well they did. They did have a
Yeah,
small.
they're all the banks, right?
Well,
All
this
but
was
Citi
today.
had a
This was
fall.
actually today. This drop right here was today.
Yeah.
June. That was yesterday. Sorry, I keep thinking today is the 16th. Uh, Small drop and then it just recovered.
Yeah.
So, yeah. If we do, you want to take a look at City, just real quick?
We can show it, right, just to be the continuity of
Wow,
stuff.
wow, bro,
Yeah, they've been running.
City.
They've been running since they come out. Again, City. What they bought Discover, right? No, that was Capital One.
No, Discover bought.
Discover and Capital One are merging. I thought it
Yes,
was City for some reason.
yes, yes.
Yeah.
But City's actually doing really good. And guys, look at this chart one more time. You had a chance to buy, and by the way, we've called out City here plenty times in the past. City was as low as, well, on the 52-week range, 53 smackaroos.
Yeah, well, again,
$53.51.
everything when we dropped down to the recession.
Well, this was even before that. Let me tell you, City has been like this since going all the way back to like 2022, right? 2022, it was $44. I mean, I believe the lowest was $38.24 right there on October 27, 2023. So no, City has had a lot, like a really, really just bad downtrend since 2021, June 3rd of 2021. So you guys, you had the chance to buy City with a massive dividend yield. What? Do you remember what the dividend yield for this thing was when it was at those prices? I mean, I could do the math right now real quick. If you do $2.40, Mike, divide that by that price I said, the lowest price. So do $2.40 divided by $38.24. Huh?
5%.
6%. Oh
But
my
again,
goodness.
remember they're raising as they're going up. They're raising their dividend too, so we got
They
to take
are.
into account that.
They
So
are. They
again,
are.
around a 5, let's say a 4%, right? The 4 standard average. But anyway, it's you had a 4% dividend plus doubling your money essentially.
And they also
So
announced a massive. I mean, look at this. Stock climbs as it ramps up its stock buybacks. Look at that. It expects to buy back $4 billion in stock in Q3 as per Bloomberg News reported. That's insane. And on top of that, they also announced a massive dividend hike. I believe. Oh no, okay. It wasn't massive. Wells Fargo was the big one. Wells Fargo was like 12%. Citi though did 7%. Still really, really good overall.
yeah.
So a 7% dividend hike plus a $4 billion share buyback, and the stock is rising, and you had a chance to buy this thing with a 5 to 6% dividend yield. Hopefully you guys bought it. I mean, for a while there, we were saying that Citi is not a bad stock. It really wasn't. So yeah. All right. Let's take a look at chat one more time before we go on to the Netflix. Shall we?
Yep. Let's see.
Julio, thank you so much for the comment on YouTube, and shout out to the 10 of you watching right now on Rumble. Okay.
Black saying it's not that it didn't market well. It's more people saying, "Oh, Samsung Bixby is better than Apple Intelligence," and it's basic pissing match with Apple Android fanboys and girls.
We are Android people.
Yeah.
I have never used Bixby in my life.
Yeah.
Have you?
No.
Yeah.
But anyway, so basically, Fatal is saying that Lax, leave Wells Fargo, just go to Bank of America.
I mean, I'm not saying anything. I'm not saying anything. When it comes to stock, I'm not a customer of Wells Fargo. I don't know. I know that they had their controversies back in the day. I mean, back in the day, I remember being in middle school and I heard controversies with them.
It's not even that, right? It's you need to keep as little money in the banks as
Yes,
possible
yes,
and keep it in the market.
yes.
Like stop. Okay, the bank is
Where's
only
my picture?
there to be a merchant for your money.
Hmm.
As in, money comes in, money goes out, and it's just a little pool to keep in there that loses to inflation. But if you lose,
It's your emergency fund. It's your
no,
emergency fund.
I don't even keep an emergency fund in there. I would keep my emergency the way I do it. I keep my emergency fund in the Roth because I can take it out if I
Well,
need to.
now I will.
Yeah,
Yes, but
yeah. But we're talking the context of now. So, and then with the bank, it's basically between 7 and 5K, so that I can act in the world and not really care about like what has to go in and out,
I
and
got
that's
it. I got it. I got it. The reason why you put it in the bank is just so that way your credit score doesn't go to zero.
it.
That's it. Really is
No,
it.
banks don't even affect that. Your
Credit
bank
card,
account.
your credit cards though.
Yeah, if you pay, yeah, but that's like you put the money there in order to basically just be able to pay your credit card, pay all the bills, right? So like it's a pool of money that sits there to just die to inflation, but it's also worth it because like it keeps all your like you don't have to transfer stuff, right? So it's like enough money to where I don't have to worry about transferring stuff, but just not enough money to where inflation starts hurting me.
Right. Absolutely. You got to keep the money in the markets at this point of the game. If it's not at least in the S&P 500, VOO, SPY,
Crap, even SCHD, right? Like you can put it in dividend.
it's got to be in something. Like at this point of the game,
Hell, even bonds at this point.
even
And
bonds,
I
especially the
hate
30 year,
bonds.
especially the 30 year,
No, you don't even put it in the 30 year.
5%.
Well, remember, if you put it in the 30 year, you can't take it out. Or it's harder
I
to
know,
sell it,
I
but it
know.
doesn't mature until 30 years.
That was a joke because of the
Okay.
5% yield on the 30 year right now.
Yeah, I would. Well, I would even put it in like you get 4% on a 1 month right now. So
Shout out to the 5 of you watching right now on YouTube. Really, really do appreciate it, guys. Really, really do appreciate it. And if that's all the chats on the Rumble side, shall we go to Netflix?
yes, I want to go watch Netflix now.
Let's go watch some Netflix. Let's Netflix and chill.
Yep.
Me and you, Mike. Let's Netflix and chill.
All right.
All right. So we got Netflix, guys. Netflix GAAP EPS of $7.19 beats by 12 cents, raises fiscal year revenue guidance. Did we not get the beat? I don't think we need that beat. You know why we don't need that beat? Like up here in the title? Because revenue of $11.08 billion up 16%.
Not good enough.
16% up 20 mil. It's not even that much. It didn't even beat that
Beats by
much,
20
but
mil.
that, huh?
It beat by 20 mil, but it's $11 billion in revenue.
It's 16% year over year. That's nasty. That's
And for
insane.
all those, and the thing is, side comment before we get in the next paragraph. This is why a weaker dollar is good for these companies. I keep like everyone keeps saying like the dollar reserve currency. This you want a weaker dollar, but you want it to be the reserve currency, right? Like you don't want fiat currencies being expensive. So they basically did Q2 revenue increased by 16% year over year, 17% on foreign exchange neutral basis. Was primarily a function of more members, higher subscription pricing, and increasing ad revenue. All regions experienced healthy year-over-year growth, with region posting double-digit FX neutral increases.
Foreign exchange. Foreign exchange.
Yeah.
That's what FX means.
UCANA revenue growth accelerated year over year by 15% versus 9% in Q1 2025 due to full quarter impact of price changes, basically raising prices. The company now forecasts 44.8 to 45.2 billion, up from 43.5 to 44.5 billion. So basically, the upper end became the bottom end, and the
it's not even part of the consensus anymore.
Yeah, they basically were like, "Hey, we're gonna make more money. Great, move." And then operating margin of 29.5 versus 29 previously, or 30 on a report basis.
Wow.
And then they literally cite the dollar. Our forecast primarily reflects the weakening of the U.S. dollar of their currencies, plus healthy member growth and ad sales.
And then when it
It's
comes
the
to
weekend.
guidance, and then when it comes to Q3 guidance, they're expecting $11.53 billion versus the consensus of $11.28 billion in revenue,
Yeah.
and EPS of $6.87 versus $6.75. This is nuts. Netflix is nuts right now. So let's take a look at the Netflix chart up today. What 2%, almost 2%. Now post market, ironically enough, basically losing all of the gains from today.
Yeah, it
I
wasn't,
don't.
but it's
It's
like
it's
it
it's not.
ran into earnings and everyone's surprised, right? It's like it's not even like Netflix. Like look at JP Morgan, right? Like when we talk about JP Morgan, how it basically dipped right before earnings and then went back up. It's gonna be the same Netflix.
Could you
Telling you in the
imagine
video.
buying this? Could you imagine buying this on June 15th, 2022 for $180? $180, just
Meta
100 shares.
2.0.
And
It's Meta 2.0. It's Nvidia at 100, and then it's literally it's a cycle of all these like tech companies. Like everyone like, and I actually, not to jump to the Nvidia thing. I was talking with a coworker, and this actually applies to Meta, it applies to Netflix, it applies to everything. Like all these tech companies, including, and let me know if you agree. Everyone said Nvidia gaining $1 trillion was crazy. Everyone said Amazon would never make it. Everyone said Microsoft wouldn't amount to anything.
back when it
That
was at
became
like
the new, yeah, yeah.
$85,
And then those companies did it again and
and
again
again,
and
and
again,
again.
and it became the new normal. So, talking about Nvidia, it gained 1 trillion in a heartbeat. What's stopping it from gaining 2 trillion in a heartbeat?
Yeah. At this
Then
point in the
four.
game, yeah,
Like
yep.
what's stopping all these companies from just, no one believed Netflix would do this when it hit the lows.
When it hit right
No
here,
one believed it
right
when
here,
it was 500.
right
No one
here,
believed it when it was 800.
right here, right
Yeah.
here, people were screaming bloody murder. The world's
Yes.
ending.
The same,
Netflix is going
hey,
to zero
the
every
same
single
way with
time.
Meta.
Every
The same
Meta
way
went
with Meta.
sub 100. Meta went
Yeah.
sub 100 a few years ago, 2022, if I'm not mistaken. Right now, it's upwards of like $900.
Yeah. Well, Meta's like 7.
Whatever. You get
Yeah,
you get my point.
But anyway, Netflix, no one believed it, and that is the fuel that will fuel it higher.
Mm-hmm.
The,
Agreed.
the doubters will fuel the rally because the FOMO that comes with them doubting eventually breaks them, right? Why I keep talking about the net speculative positions, 150,000 positions shorting as we're hitting. We hit blue sky breakout all-time highs. I can't wait to see you guys get squeezed more, because I have a standard with this man right over here that I want to gain 100 on the fear and greed index.
You're not
And
gonna get
you guys are going
100.
to be
You're
the
gonna
fuel
get
that are going to do
99.
it.
You're gonna get 99. But
No, I want 100.
read
If
chat
you
because
will, I will screenshot and then send it to you 100 times. That.
fair enough. Read chat because I want to go use the bathroom. Right?
All right. Let's see. Do you know when Happy? Lax talking about. Do you know when Happy Gilmore 2 drops next Friday? This 25th stuff might go up. Like Netflix is gonna go up anyway, right? Like it's a money printing machine. People, again, it's the same thing like with Nvidia, the same thing with Microsoft, the same with all of them. They're money printing machines. No one believes it. They're all doubting it, and it's what's gonna fuel it higher, right? And then like saying, cause God knows. They are throwing ads for that movie like it's nothing. Yeah, like it's going to be a very, very interesting time with that. Let's see, we do got any YouTube chats? No, not really. And but yeah, like what are you guys excited about? Which of the top companies are you excited about? Meta, are you excited about Nvidia, Microsoft? Are you going to be buying Netflix earnings? Throw it in the chat. I want to see what your opinions are on that. Oh, I did not say hello to Plastic Quack. I'm sorry, sir. I did not see you. Hello. And then let's see. Did I miss anybody else in the chat? No, not so far. But yeah, like Netflix. A lot of people, like, even as much as I disagree with Tom Lee, a lot of things. Yeah, he was talking about Netflix very early on. It was very interesting to see the rise and fall, on the ultimate comeback of Netflix, right? It's one of those stories that's actually a little inspiring. But What you guys want to see? Lax, take money. Gosh. Let's see. What else is there? You're back.
I'm
Good.
back. Yes, I am back. All right. So,
All right.
let's continue on with this. Let's come over here. So, when it comes to Netflix, we can see that this is a massive, massive rise. In fact, the 52-week range, it is $587.04 to $1,341.15. Absolutely crazy. Now, here's the thing when it comes to this. Is this price a good price to buy it at? Right? This is the main sticking point, because after this massive run up, a lot of you may be saying it's still a good buy, because it could be 2,000, right? It could be 2,000 by next month. Or
everyone has the Nvidia fever dream.
Right. Another 40% overnight. Or it could not be what it is right now, right? It's the fundamentals that don't necessarily justify this. So let's take a look at the discounted free cash flow for this, because I do have this already set up. And we got the ticker for NFLX, market cap of 552. It's still only a $552 billion.
Yeah, that's the thing. It's not
Has
a
it reached
big
a
market.
trillion?
No.
Wow.
Berkshire Hathaway is more worth, and JP Morgan are worth more than it.
Well, look at this PE though. Look at that PE.
Yeah, it's trading higher.
It's
higher. I would like to preface, I said the same thing about Nvidia, and then Nvidia's fundamentals came in and basically slapped everyone.
Fair enough. But we're gonna have to take that.
Right? So
we're gonna have to take that into account though, because when it comes to the discounted free cash flow part of it, so
yeah.
All right. Next, we got the dividends, which they don't pay any. I would not put it past them if they were to issue a dividend fairly soon. That would probably make their stock go up even more. Price to free cash flow, we can see that the 10-year one's in the negative. They did have negative free cash flow going back 10 years ago. We'll see this in just 1 second. So we really can't use this as a metric to determine if it's overvalued or not. Price to sales, 13.5%, and a net profit margins of almost 23.07%. Now, when it comes to these fundamentals, this is where things get a little bit interesting. So let's give our 2 cents when it comes to this, shall we, Mike?
Damn.
First of all, yeah, this is the net income. This is not the revenue. This is the net income. 2015 of 122.6 million with an M, all the way to the trailing of 9.3 billion with a B. They did have a small dip right there in 2022, which is not really surprising. We saw a lot of companies fall during that time, and then just a massive pump up. That is an increase of 7,461%. So, what would you give this as a grade?
Net 80, 85.
Really?
Yeah. All right, I take that back. 90. I would say 90 because even though like 2022, that was interest rates, so you can attribute it to companies falling. And then like it's nice.
Aside from these 2 years, it's fine by me. That's why I'm going to give it a 95%. All right. Now, the free cash flow. We do have negative free cash flow, but negative free cash flow doesn't necessarily mean that it's a bad thing. We just want it to be a little bit, we want to see progress. This is weird because we just went from negative $840.6 million in free cash flow to $7.45 billion in the positive. And what makes it even more peculiar is that this graph is split down the middle.
Yeah, literally.
It's like 2020 hit, again, boom, instant positive, which makes sense, by the way. Makes sense.
Yeah, Netflix restructured.
No, it's by everybody staying at home.
Yeah.
And having nothing else to do.
Right, but they also had they changed the, I believe, leadership around that time, which actually helped a lot. And like you see on the chart, right? You basically saw a massive drop. New leadership takes over, restructures the company. You start seeing in the next 2 years, kind of like just a stabilizing period, and then it's consistently hitting the targets, right? Like
right here.
Yep, Netflix is basically printing money. So again, it's very similar to how like Amazon, Microsoft, Nvidia, all these companies started off when they finally turned around. We saw what even AMD, where all these companies started turning around and they just kept going. So for me, like when we're talking about grades for this, I'm going to give it a little more benefit of the doubt, saying a 90, because I've seen the potential that these graphs can have, but with a caveat of you need to pay heavily attention to this so it doesn't eat your dang lunch.
Right.
Don't just attribute like 1 year being bad. It's like now to where it's like, I'm not no, it's this just that year, right? Because then that 1 year turns into 2 years, 2 years turns into three,
It
and then you
becomes
turn
a
into an
trend.
apple.
It becomes a trend. Yep.
Then it becomes an apple.
Yeah. Now, when it comes to this, we can see that this is an increase. My bad. I had it as a decrease. The formula there was wrong. Increase of 986%. Average free cash flow would be $1.3 billion. I'm actually going to go a little bit lower. Believe it or not. It's split down the middle. I'm going to have to give it at around like 80% when it comes to this, because it's split down the middle. We only have really only 3 years, right? Not even 3. We only have two full years of actual numbers. I'm not going to count these right here. And this one, we're still in the trailing. So, but I'm still going to give it an 80 because it's still looking really good. Now, the revenue looks fake. This graph looks absolutely fake, going from $6.8 billion in 2015 to the trailing of a whopping $40.2 billion. This is an increase of 492%, as you guys can see right there, 492.57%. And I'm not even going to ask you because this is an easy 100.
Yeah, I do want to make a comment about it though. Revenue can be manipulated a little bit
Sure.
in the sense of like what it actually means for the business. You want to necessarily look at like profit and net income because
Well, that's
you can
what we.
increase revenue, but you can make no money, right? You can make
Sure.
no money off of it. So it's
Sure.
good to see a trend like this, right? So like they're building a base, they're using that money to build a business up, and then they're increasing their margins over time, right? It shows a logical progression of stuff. But this is mainly like for like other companies, right? When we talk about it, you don't want to necessarily see like revenue like this and then net income and cash flow basically garbage, right? Do all three things make sense?
Right. It's a story. Like, nothing here is the end all be all. Not one
Yep.
fundamental, not price of free cash flow, not PE, not discounted free cash flow. Nothing by itself is the determining factor. It is everything together.
It's like
It's
green
everything
flags,
together.
red flags. It's
Right.
like it's like sometimes you need to dig in and maybe the red flag's not a red flag or
Right.
the green flag isn't a green flag, right? Like look at it. This is your surface level view.
You can zoom in on one thing and say it's good or it's bad, and then ignore everything else. And then you're like, whoa, how did I miss that? Well, it was staring at you right in the face. So again, nothing is the end all be all. You have to look at the whole entire picture to the best of your ability, because you can't really look at everything all the time. But gotta do
Uh
that.
Lax brought up the short that I think he saw the same guy I watched. He's like, I still have to laugh how Netflix laughed at Blockbuster and look they now money printing machine as you said. Yeah. Netflix
Uh,
Blockbuster
other way
bought a
around.
yeah.
Blockbuster laughed at
Blockbuster
Netflix.
tried, yeah. The Blockbuster tried to buy. No, they were like, should we buy Netflix? Nah. It's like 5 years later. How much did they make?
Yeah, and
Crap.
we have one
And then
store left in Alaska.
yeah,
So, assets as a reference only, nicely increasing. Liabilities increasing, but you guys can see that it is stagnating. Whereas the assets are actually, the slope of the assets is a lot better than the slope of the liabilities. You can see that right there is starting to plateau, which is actually really good. Assets minus liabilities, we can see that it's actually doing really good. It really is doing really good, guys. Wow. Nice, continuously increasing for the most part. Average total assets of 35.4 billion, liabilities of 22.85 billion, a difference of 12.6 billion dollars. What do you think?
I like it because like how they're building assets into a company that now is like, okay, push the boundaries. Those debts are now becoming assets. My only concern is right now with the how money is harder to acquire, that we would see a slowdown in this, maybe a plateau. So that's what I'm gonna You need to look out for that. However, it's not showing it on the graph right now, and no signs of it. So I was going to say 100. And HC says hello. Bye.
Hello, HC. 100.
Yeah.
I'm gonna go with a 95. I'm gonna go with a 95, but still really, really good. Where on Rumble or on YouTube? Hello, HC. Hello. Thank you so much for stopping by. All right.
Where's my short everything question?
Yeah, where's short Nvidia? Because right now you just got your teeth kicked in.
Teeth. You don't have a face left to kick in.
Cash flow minus the liabilities. We can see that it was downtrending up until 2019. Hit 2020, boom, it just starts to get progressively better.
Yeah.
In fact, right now, as of the trailing, we are less than the average. Right now, we're at negative $20.613 billion. The average being negative $21.5 billion. What would you give this as a grade? I'm actually going to stick mine with a 75, but what would you give this as a grade?
I was going to say 65 just because I want to see how it progresses, right? Like, ever since I saw NVIDIA's graph, I'm just like, I kind of weigh everything against it.
Especially with their cash flows being in the negative and then out of nowhere being in the positive.
Yeah, I want to see more development of it, right? This is like the yellow flag. Okay, I understand why it is. I understand this. I need to keep an eye on.
Then by that logic, wouldn't you change your grade on the cash flow one?
No, because we saw what they're consistently doing, right? So like with their cash flow is the main reason this thing got flipped, right? They're going to keep increasing that because they're a tech company. It's kind of what they do, and they have to. So essentially, I want to see the cash flow increase at a higher rate now than their debts that they're incurring, right? Because we're seeing like their liabilities kind of taper off. So you would expect cash flow up, liabilities taper off, maybe even go down a little bit or stay flat, and then that graph fixes itself.
Instant now the shares outstanding. Now, this is not consistent buyback. However, it is looking really good because, for starters, 2015, 427.9 million shares to today of 425.7 million shares. That is a buyback of a little bit more than 0.5%. Previous year to the current year, down 1.16%. Now, they were actually issuing shares from 2015 to 2022. And then in 2022, they began buying back. What does this tell us? That they know how to control their shares. They know how to control their shares, and it's good. I don't want... If a company just buys back shares, okay, great. I'm not going to say that's not a good thing. If a company issues shares, I don't like it, but it depends on the context. If a company buys back issues, that tells me that they know exactly when their share price is overvalued. And I love to see it.
Yeah.
Odds are...
They're more sophisticated.
Go on.
They're more sophisticated, meaning they understand finances a little bit better, to your point. And also they know when, okay, we can sell shares to gain money to then leverage, right? It's all the game of leverage.
Yeah. So what would you give this as a grade?
100. Just because the skill needed to do that is way more than just buy back shares, right? Because then it's like buy back shares. Okay, that's just like 1 + 1 = 2.
Right.
But the oscillation and then not affecting the rest of the metrics is where it really, you get skill. That's where hardcore skill is developed.
I agree. Lastly, cash equivalents, they currently hold $7.2 billion with an average of $5.13 billion. Overall grade for me, a 91, and for you, 92. So we're very, very close to each other there. Not surprising. It's Netflix, right?
Yeah. There's not a lot to argue about.
Right. It's Netflix. Nothing really much to argue about here at all. The question is, what price do we pay for this thing? Because at near $1,300. In fact, we did hit $1,300 a few months ago. At least in the 52 week. This could be a little bit expensive. Now, can it be, right? So let's take a look at the discounted free cash flow. Now, I've already put in the PE assumptions as well as the discount rate assumptions. All right. So we only need to put in the revenue to free cash flow, which in the past 10 years, it has been negative 1.05. Remember, we did have a lot more negative free cash flows. This is why it's in the negative. All right. So this is not necessarily true moving forward. Next, we got the average net income growth. That's actually a little bit more to reality.
Yeah.
65.6%. And average share change, they've been buying back at around a little bit more than 1%. But again, take
Yeah.
this with a grain of salt because they could easily issue, especially with a price of 1300.
Yeah, for all the share change, I would put 0 just because we've seen that they like to keep essentially a flat share
Okay, well, we can't do that.
oscillation.
We can't do that. We have to go low, medium, high.
All right, so do like issue 1%, 0, buyback.
There you go. That's a lot more like it. By the way, guys, if you guys are already looking at these numbers, y'all can already see that 510 on the median. So this is going to be interesting, especially once we do this, because this is going to play a major factor.
Jack it up like no tomorrow.
So we're already at 686 on the high end. Okay, so free cash flow to revenue growth. What do you think?
What was their like the steps in the last 3 years
For what?
for free cash flow growth? Because remember they had a big negative for quite some time.
There's your free cash
So
flow.
like
You really can't tell. That's the problem. I'm not saying that they're going to go.
Can you average the last 2 years? No, they didn't even grow much. Let's say they
grow.
grow
It's about
3%.
7 billion. It's about 7 billion.
Yeah, so that's like what, like 1-2%?
Well, but you have to extrapolate this in the next 10 years.
Is it per year growth or is it the total growth over 10 years?
Sorry, every single year.
Well, normally businesses like that grow at like 3% year over year. So you could honestly do like a 1, 2, 3 assumption, right? They're going to grow 1%.
Hang on. Let's take a look at. Oh, not that. Sorry, growth. Let's take a look at this. So the revenue growth. Well, this is the revenue growth, not. But Seegoff is saying that the revenue growth forward, looking at the next 2 years, is 14.05%. It's revenue growth, not free cash flow to revenue growth, but it gives you and the sector median is 3.43. As you said, 3%.
Yeah, I would assume 3% because if it gives you a value that is like right, like a cheaper price, like it gives you a worser price than it is, or like a less target, then you get all the gravy, right? If you make the lower assumption.
So you want 3?
Yeah, let's do like 3, 5, 7.
3, 5, and 7. Okay.
Yeah.
Okay. It's 3, 5, and 7. That should be okay. Yes, 3, 5, 7. Okay, and now for the net. So the average net income growth, 65.58%.
60, 70, 80. Yeah.
I don't think that's gonna happen. I don't think. I mean, 60, 70, 80. We're already at $106,000. Oh my goodness. Yeah.
They've been doing it. They've been doing it though for 10 straight years. The answer is buy Netflix. That's the answer. That's the answer that's staring you in the face.
I don't know, man.
Okay, let's do. Okay. Let's do 20,
decrease
30,
the PE?
40.
Do you want to at least decrease the PE then?
Oh, like increase it?
No, decrease it.
I think it would stay around here.
You think it would stay around 50?
Okay, do like 20, 30, or no, 15, 30, no, 15, 20, 25.
Yeah, because when you decrease the PE, things fall. So what was it, 15?
20, 25, right? It's still not going to change it, right?
It's
like
around 42,000, yeah.
Yeah, the answer is buy Netflix.
Now, will this thing actually hit these numbers?
Maybe because you're doing it based on the current share price. That's assuming no stock splits, no nothing, right? So if you take let's say two 10 to 1s, right? So then
a 20 to 1 split maybe.
Or like 110 to 1 and then another one down the road, right? You could, if you do that, then it's almost like 100 to 1, so $425
now,
or sorry, 4,000.
Now, what would happen if the net income was a little bit lower? Let's just bring it
Do
to like
20, 30, 40.
What was it?
20, 30, 40. That's standard for like any company.
See, this to me is a lot more acceptable because you're not gonna remember as a company as time passes, the growth is gonna slow down.
Maybe.
Yes,
Yeah,
yes,
I
it
will.
is.
We saw it in Nvidia too, right? So I can't even. But yeah,
So
it's
this to me
it's
feels like a lot more of a
yes, but it's
reasonable.
basically it's telling you the same thing of this is a good place to buy. It
Right.
is extreme. It's trading at lower than its evaluation. It has an extreme amount of upside. It's probably going to be $1 trillion company soon. So you at least have 100% probably compound on the initial investment that you make, and it's just printing money. It's
To me,
literally a cash cow.
to me, I would actually look at more around this right here, this middle one. I always try to aim for the middle one, obviously.
Yeah,
Yeah, around three thousand
that's a
dollars.
two
That
x.
that seems reasonable, honestly. Really, really does.
That's a 2.3x your money.
Yeah, yeah, from right now. So yeah, the only one that
And
doesn't show this is this one, and
yeah, but
honestly, it's like
it's like Netflix doesn't innovate, doesn't do anything, doesn't grows revenue at less than it has been doing, and transacts at a different like PE ratio. It's like how many bone anchors do I have to tie to Netflix for it to hit the low evaluation?
fair
And
enough.
it's like then you ask yourself, in any realm, is it going to be one of them, right? And the answer is no. Like there's no evidence of it. So it's like continual upside.
Would you like to go over your charts of Netflix?
Yeah, why not?
Okay, good.
Actually, let me do that. So basically, actually, let me pull it up on. Whoops, sorry.
You're okay.
I had it. I want to pull it up on this chart just so I can show you guys. But Netflix before the earnings, right? Even though it had the dip where we had the 50-day moving average kind of coinciding right here, that's gonna allow us to. Or sorry, you need that because then I forgot that you got your screen set to that. My bad. Basically, 50-day moving average sitting at right where the price is now post earnings, and 200 sitting at $982. Again, I don't think it's going to drop there. I would watch. We have long-term support in this area, so I definitely be looking for it to kind of take a breather and go higher. We also saw on Netflix today, if we go to the daily, kind of a early warning buying sign showing up at the chart. Will it hold into tomorrow? I think you're going to see a Netflix gap down up. That is just my opinion because this would really set up a nice RSI cross, pushing higher. We go to the weekly. We see that we had a sell signal that was going in kind of a divergence. So if you get the gap up, pump up, I think it invalidates this time frame, and we can see that once it loads, that basically it's a huge amount of institutional buying and is just continuing higher. So going back to the daily right here, there's an opportunity, in my opinion, to buy it even at like 1954. That's still an amazing opportunity. Sold off a little bit. We go to 4 hour, let's say, we can just see like that yes, you still had the buy signal going into earnings. People are basically buying. It only went down to the price it was like a couple days ago. So again, it's in this point where there is no major bad sign showing up on the chart. The daily looks like a buying, weekly opportunity that you could invalidate. If you gap down, pump up. If you see Netflix green tomorrow after it basically gap down 2%, then it's a clear sign that this is a dip buying opportunity and it's going to run to new all-time highs. The cash flow basically supports that. And all these things are summing up to be like, okay, you're getting a discount on a really good company. You're getting a discount on a company that just had a pullback. They ran up into earnings. So this reaction of knee jerk of selling is normal. And also considering futures right now are green, that's leading to everyone's like, yeah, we sold now. Broader market's going to sell off. So therefore, the risk on mentality is still there. And then everyone's going to have like that regret. Maybe I shouldn't have sold Netflix. And they go buy back in, which causes more people to buy, right? Like you create this never ending spiral as institutions are basically buying this like a crazy person.
Yeah,
So again, it's like you get a momentary pullback and everyone thinks it's
the end of the world.
I'm like, and then like literally, I'm like, okay, if Netflix was $1,191 tomorrow, where all the institutions bought, what do you think is going to happen? They're going to go buy more and then run this price up. It's like the
Netflix
Nvidia at 85.
Netflix falls sub $1,000.
It's
Yeah,
just a buying
this
opportunity.
is a buying opportunity, and if it falls more of a buying opportunity. These fundamentals, aside from the free cash flow, which it is getting better, the fundamentals are
Yeah,
looking tremendous. They're
but it's
looking really,
also
really good.
I would also say that yes, the cash flow is a little wonky, but if you compare it like what you want it to be,
Mm-hmm.
those are more comparative to $1 trillion company. And Netflix isn't $1 trillion company, right? Like if we looked at the market, JP Morgan, a Google, Apple, Amazon, Nvidia, Meta, yeah, we expect those cash flow graphs because they're 2 trillion, $3 trillion companies.
I see what you mean. Yeah.
I think Netflix can build into it. I think that it's going to fix the cash flow graph. When it hits $1 trillion, we're going to look back at Netflix and be like, hey, point up.
Yeah.
But the thing is, everyone's like, they don't see that. And then they complain that they didn't see it. And I'm like, this is the potential that is on the chart.
Right.
And you're being rewarded for the early adaptation. Yes, it can completely go against you. But I'm like, if you're complaining about the cash flow and everything else is fine, the risk to reward is there.
Yeah. No. I fully agree. We saw the same thing with Meta when it fell sub $100. I'm just like, I'm looking at the fundamentals. I don't see anything wrong.
It's the same thing with Nvidia, right? Wrong. Loses 500 billion in a single day, holds the world record for biggest loss in a single day. You know who's going to be laughing at it at the end? When it does $1 trillion gain in one day.
Yeah.
Those are the people that are going to be laughing at the bank, right? The same way everyone's that bought Meta at 100 is laughing all the way to the bank. The same way everyone that bought Netflix at this really cheap price, and probably right now, like this is the time when this company is at a pivot point. Let's say it's either going to go stupid high or stupid low. There is no more in between. It either will make it or break it.
What is their competition? Honest question, because
Hulu, Disney, but I'm like,
Disney.
That's not really a company. It's not their pricing again. Disney and Hulu's pricing is not competitive with Netflix. $15-$20 a month to get like almost like a live streaming service like that. It's Disney at the best.
Yeah, Disney at best, but it's like
maybe like Roku and Samsung TV, but then again they're more expensive. Amazon TV.
I don't know what's good on them because I have no idea.
Yeah, that's the thing. That Netflix is innovating, right? Name a streaming company that's really innovating.
Netflix is even taking on some anime. Netflix is remastering. So what I heard, now I don't know if this is true or not, and I don't know how they'll actually do this, but apparently Netflix is gonna, once One Piece ends, they're going to remaster One Piece and remove. It's gonna be the exact same thing. They're just gonna remaster it, like make it all pretty, like especially the older. The older
like early on
from 1990, from 1998, 1999, and they're gonna remaster it to the new one, and they're going to make it so that it's not 1,000+ episodes. They're going to just go to the main points and go, so that way you don't lose the story, but you don't have to wait 1,000 episodes. And Oda, the author of One Piece, has already greenlighted this.
Yeah, because like you're trying to bring it to a generation that never saw it, right? It's like
at least
to watch it now, it's very difficult, right? You're lowering the barrier to entry.
Right. I mean, it took 40 episodes to get to the good arc in One Piece.
Yeah, and then Lax saying Netflix took a crap when they did the first live stream of MMA fight. Yeah, but
they took a crap because everybody wanted to watch it.
Exactly. It's the Nvidia problem. Not enough graphics chips for the market. Netflix, not enough server space to match all the viewers.
Right.
That's the most beautiful problem to have.
That is a tremendous problem to have. Not to be able to have the supply for the demand. You're just like, and then you're the only game in town. Just like,
and then you pull in a video of like, we can't supply Blackwell, but hey, guess what? We got the second and third generation of Blackwell. We can't make that either.
Yeah. So
please get on the list. It's like
I don't personally think. I honestly think that Netflix, name me another streaming service. Honestly, I don't think that there is.
Do a stock split. They just need to do a stock split. Stop being Chipotle. Stop being like Costco.
They did a stock split eventually. They did a stock. Chipotle did a stock split eventually.
Do it now so you get to $1 trillion faster. The sooner you do it, the sooner you get to $1 billion mark.
Look, stock split and a dividend, that would be
do both and literally get every investor that wants it. Like, I mean,
you would literally get all the dividend investors on board. Yeah, it would be crazy. So guys,
you know what I think they're gonna do?
What's up?
Once they get to 1500, they're like, we don't want to be like Nvidia and do 10 to 1, 15 to 1.
15 to 1. So that way it's a what? What?
It's still 100. It's still split to
So it's
100.
100, yeah. It's 100.
So,
So, guys, that was Netflix. But by the looks of it, now I don't know about the $43,000, the $200,000 share price. Something along the lines of like 3,000. That's a little bit more reasonable, right? That's a little bit more reasonable. And again, all of these calculations that we do when it comes to the discounted free cash flow, that's available for everybody to have. I give you guys the 5-year one available for free. The numbers obviously will be different because only 5-year, not 10. But you guys can still make your own assumptions for yourselves, which is highly, in fact, it's the only thing that we encourage to do. Make your own decision for yourselves. Not financial advice. Every investment is the present value of all future cash flow. So with that said, we're practically done with the stream. How our markets are, is this correct? Futures right now are up about 1/4%.
It's like they're up by half of what you're displaying there, but then again, they most likely will be this on open again. Netflix was not able to take it down, so therefore FOMO buy territory extreme greed.
And also something that we forgot to mention was that bitty Bitcoin hit.
Yeah, it hit 120K.
120. Why isn't it there? I thought it would show up.
I know, because you're looking at closing price. So
no,
the top,
122 right there. Almost 123.
yeah, it's 120 right now.
Yeah. So close to anyways. So yeah, Bitcoin hit all time
live price.
So yeah, Bitcoin hit a new all-time high with that one. So congratulations to anybody who holds Bitcoin. This guy, even though it's not an investment, still hold it though. Still hold it. So guys, I think that'll pretty much do it for this live stream. Let's take a look at final. Wow, 17 of you mad lads watching right now. Thank you. Oh, sorry. Thank you guys. Oh, wrong camera again. Thank you guys so much for watching. 18 of you mad lads watching right now. Y'all are great. Really do appreciate it. And if I'm not mistaken, we are the 3rd biggest stream on Rumble right now. We are the 3rd biggest stream on Rumble on the finance category. Okay. Finance category. Number 2 is just Warren Buffett starts warning about AI stocks is fake. And then 1 is actually not. 1 is actually not. 1's just talking about Bitcoin, but it is what it is. We are the 3rd biggest stream right now with 20 of you mad lads watching. So let's just read a couple chats here, and then we'll end the stream. We'll do a raid. We'll raid out, and then we'll okay. So Let's see. The lax one was lax. I tell you, when that happened, I thought it was my internet, but when I ran it on my 5G and kept buffering, the servers were on fire. But the recent live stream, they did it way better. Yeah. I mean, it's when you have that massive influx, you always do it better the second time. You're ready for the second time.
Yeah.
You know?
You learned from all your mistakes.
You learned. So, all right, guys, I think that'll pretty much do it for this live stream. Again, thank you so much for everybody watching. The people on YouTube, even though we didn't have that many, I appreciate everybody watching on YouTube. For the first time, we actually did not hit the like goal on YouTube. Did we hit the like goal for Rumble? I wonder. We're at 5 likes. Guys, there's 19 of you mad lads watching right now. Smash the like button. Or 20. Smash the like button. The like goal for Rumble, it is, of course, 10 likes. So get it happen, guys. Let it happen. Smash the like button on Rumble. Smash the like button on YouTube. And with that said, YouTube only. Make sure to subscribe. Comment really does help here, guys. Watch our videos, man. Our videos on YouTube have been skyrocketing recently. I don't know why, but I'm not complaining. I'm not complaining at all. I just released a video showing you guys. In fact, I can maybe even pull it up, but I just released a video showing everybody here we go. My dividends, well, my whatchamacallit? You guys can't see it. My portfolio performance for the month of July so far. So watch it. It is basically the reason why I invest, dividend investing, passive income. So watch it. It's really, really, if you guys would like to see so far how the portfolio has been performing after all the buys and all the sells and all that other stuff, there it is right there. You guys can watch it. And yeah, it's really, really good. So make sure to watch it right there. So with that said, YouTube only, peace out, and we will see you all. And we will see you all next time. Alrighty, Rumble. Rumble. The only reason they're skyrocketing